Hello, my name is Nithipath, and today we will be looking into a research paper I've done for my statistics quarter 3 project on investing in Dogecoin using the Bollinger Bands. Before we get in, let's go through the abstract. This paper was written by, me, with the intention of analyzing the efficacy of using the Bollinger Bands in investing in Dogecoin. We will be looking into explaining and connecting factors such as changes of price, standard deviation, and other patterns in the graph to maximize an optimal entrance and exit strategy using data collected about Dogecoin prices from January 1st, 2019 to December 31st, 2021. Purpose of the study. There's a certain level of uncertainty lingering above the world economy, which is causing people to feel less secure about keeping their hard-earned cash in conventional places such as commercial banks or public pensions. And with the ever-looming threat of inflation threatening to diminish the value of money not put to use, people want to find alternatives to where they can invest their money. One such alternative can be found in cryptocurrencies, from Bitcoin to Ethereum and even Dogecoin. However, such ventures can be very risky, and people may end up losing the money they wish to save. Entering this field with no prior knowledge of price analysis or the usage of indicators will be no different from gambling. This paper seeks to help prove the efficacy of one such indicator, the Bollinger Bands, using Dogecoin as the subject of the study. Throughout the paper, we will be answering the questions of: can the Bollinger Bands be applied in investing in Dogecoin? How to apply the Bollinger Bands in investing in Dogecoin, and how effective is applying the Bollinger Bands in investing in Dogecoin. Significance and scope of the study. The study is done on Dogecoin using data collected from Yahoo Finance and TradingView within the time frame of January 1st, 2019 to December 31st, 2021 at a daily price frequency. Again, this study is to help people who don't have any prior knowledge of indicators, and to show them how useful the Bollinger Bands may actually be. Right, literature review. Firstly, let's talk a little bit about what the Bollinger Bands even are. The Bollinger Bands are a trading indicator that mainly looks into standard deviation and the simple moving average of a stock price. The simple moving average is found by finding the average price of a stock over a certain number of past days, in this case 20 days. And the Bollinger Bands refers to the two lines above and below the simple moving average, being one standard deviation value of the day, above and below. There are many ways investors use the Bollinger Bands to help in investments, but the two to be observed today are overbought/oversold stocks and the squeeze. The basic principle to understand when using the Bollinger Bands is that the closer prices move to the upper band, the more overbought the stock is, and the closer prices move to the lower band, the more oversold the market is. That is to say that the closer prices get to one extreme, the more likely it is to make a reversal. Another variable Bollinger Bands can be used to analyze is changes in volatility. Volatility is expressed by the distance between the two bands and the simple moving average and each other. With the closer the lines are, the more constricted volatility is, and the farther they are, the more volatile the market is. Periods of high volatility can be expected after periods of low volatility, and vice versa, though they do not indicate exactly which direction prices may head. Methodology. The study is broken down into 3 parts: data collection, data analysis, and applications. Firstly, data about Dogecoin from January 1st, 2019 to December 31st, 2021 is collected from online resources. The sources to be used are Yahoo Finance's price and volume tracking and TradingView's graphing tools and indicators. The data is downloaded directly from Yahoo Finance's record at a daily frequency onto a Microsoft Excel sheet, giving us information about the date, daily average price, opening price, the high/low price of the day, and the trading volume. TradingView offers a graph of Dogecoin prices from the 3 years, along with tools that can help us analyze, notably the standard deviation, the simple moving average, and of course the Bollinger Bands. Next, Data from Yahoo Finance is used to find other variables, such as the simple moving average, daily standard deviation, the upper/lower ranges of the Bollinger Bands, the price and standard deviation percent change per day, and standard deviation to price ratio in percentage. These values will serve as more accurate data to be used for calculations as compared to the data from the graphs for, let's say, specific dates and price comparisons. Along with the graphs provided by TradingView, a pattern is observed within which, once a volatile stock price makes contact for a certain amount of time, a reversal may be expected. In Excel, this can be expressed by how close stock prices are to Bollinger Band values. Data from notable dates will be provided in the appendix along with separate graphs for each of the 3 years. Patterns of volatility will also be analyzed with changes in standard deviation. Variables. Here are the other variables included in the study and how they were calculated. Limitations of the study. The study is only done on Dogecoin using the Bollinger Bands, and the efficacy of this indicator on other cryptos or stocks may vary. Also, the Bollinger Bands are more of a short-term price indicator and should only be applied along with other indicators for maximum optimization. The study is only done using the Bollinger Bands as a standalone indicator, and using it along with other indicators may see differing and varying results. Data collection. Dogecoin prices were collected from Yahoo Finance and TradingView from January 1st, 2019 to December 31st, 2021 for a total of 1,078 days in total. All calculated values will be accessible through a link to a Google Sheets spreadsheet in the appendix below. Each year will be analyzed in the following sections separately, covering 2019, 2020, and 2021. With the information from notable dates of fluctuation being analyzed. The data of the mentioned dates, including the daily average price, moving average price, price fluctuation, and the ratio of the price relating to the upper and lower bands, are provided in the tables below. The figure above summarizes the data collected over the year 2019, with prices fluctuating between $0.00181 in February 6th to $0.00386 in July 5th over 1 year. The average price throughout the year is $0.00258 and an average standard deviation of 0.00008. From January 1st to December 31st, the price dropped from 0.002347 to 0.002015, a 14.5% decrease. Overall, there was very little volatility and price fluctuations throughout the year, with no significant increase or decrease in prices, though relatively high spikes have occurred in April, July, and large fluctuations did occur in November. However, even with the minimal fluctuation in prices, the principles of the Bollinger Bands still stand. The prices tend to try to fluctuate within the Bollinger Bands. Two things happen when the price reaches either the upper or lower range. Either it surpasses it or it does not. In 2019, with prices and volatility being relatively low, the bands were more constricted compared to other years, meaning it is easier for prices to surpass the bands. Once the price breaks beyond one band, it will continue to climb further. However, whenever the daily average price begins to reverse, one can expect it to dive beyond the SMA or even break beyond the opposite band. A good example can be found in the large spike in early April. From April 1st to April 4th, prices climbed ever increasingly, even after breaking past the upper band, from $0.002453 to $0.003652, a 48.9% increase. However, once the prices started to drop, they don't stop until they broke the lower band on April 9th, and only started climbing once again after April 12th. The direction of prices can also be predicted by how it interacts with the SMA. When prices meet the SMA and surpasses it, the price will continue to head in that direction until it meets the upper or lower band. If not, it will return to the opposite direction. Examples can be found in May and July when prices dip below the lower band but reverse to surpass the SMA and reach a new peak. And November, when prices changed erratically across the SMA but still fluctuated within the band. 2020. The figure above summarizes the data collected over the year 2020, with prices fluctuating between a minimum of $0.001585 in March 12th to $0.004773 on July 5th, over 1 year. The average price throughout the year is $0.002736, and an average standard deviation of $0.000085 can be observed. From January 1st to December 31st, the price rose from $0.000204 to $0.004666, a 128.73% increase. Throughout the year, the prices were trending upwards, with prices fluctuating greater, though the Bollinger Bands remained relatively contracted throughout the year. Still, large spikes have been recorded in July and December, arguably outside of celebrity influence. The year 2020 saw higher variations in Dogecoin prices, with spikes of high volatility following periods of low volatility, another principle of the Bollinger Bands. The second and later third quarters of the year saw very little standard deviation, averaging at around 5.0 times 10 to the power of negative 5, but are then followed by standard deviations averaging at 0.0001155, a 140% average increase, the highest being on July 6, 2020, with a daily volatility increase of 1,263%. Although many people may come to understand that the largest price fluctuations of Dogecoin were entirely from the influence of billionaire Elon Musk's tweets on Twitter, the first and second large spikes of 2020 happened before Musk's tweets. The July spike happened on July 8th. Musk tweeted on the 17th. Most indicators, including the Bollinger Bands, have already predicted this sudden increase. Before July 8th, volatility was decreasing rapidly, and an incredibly tight bottleneck was already forming, indicating a large boost in volatility nearby. This decrease in standard deviation also made it very easy for the price to dip below the SMA and the lower band, eventually allowing it to cross back over with incredible momentum. From July 5th to July 8th, the price doubled from $0.002301 to $0.004757. However, such momentum could not be sustained for long, and the prices were well above the upper ranges, so naturally prices dropped rapidly to below the lower range on July 16th to $0.002981, a 37.3% drop. Prices would continue to fluctuate within the upper and lower ranges, rarely breaking past the upper band, but often crossing the lower band, reflecting off of the SMA. This period of low volatility made breaking past the lower band easier, but as volatility keeps dropping, the chances of prices breaking past the SMA were also increasing. On November 5th, the price finally crossed the SMA by 3%, and prices began fluctuating between the SMA and upper range, occasionally crossing the upper range, but never submerging below the SMA. Eventually, prices spiked on November 24th at $0.00424, a 60% increase from November 5th. After the large spike, prices began dropping again, past the SMA and lower band. They would rise but fluctuate between the SMA and lower band until they once again broke past the lower band, reaching a minimum on December 11th at $0.003075. With volatility decreasing and the Bollinger Bands bottlenecking, a new opportunity was rising. Prices broke past the lower band on December 12th, broke past the SMA on December 13th, and broke past the upper band on December 16th, 4 days before Elon Musk's December 20th tweet. Prices did peak on December 21st, however, at $0.004773, a 39.4% increase from December 16th. Although prices dipped on December 23rd, they would recover and continue to fluctuate above the SMA but under the upper band, ending the year with a similar price to the year's highs. 2021. The figure above summarizes the data collected over the year of 2021, with prices fluctuating between a minimum of $0.005661 on January 1st to $0.686880 on May 7th over 1 year. The average price throughout the year is $0.203901, and it had an average standard deviation of 0.013287. From January 1st to December 31st, prices started at $0.005661 and ended at $0.170297, a 2,908.2% increase. This year saw massive increases in both price and volatility, especially during the second quarter of the year, from late March to June. Riding on the momentum of the previous year, Dogecoin prices would climb much higher than ever before, even at the beginning of the year. Continuing from the upward trend from December 2020, prices fluctuated above the SMA, climbing up to an average of $0.009151 from January 1st to January 27th. On January 26th, volatility bottlenecked, and on the 27th, prices fell 5% below the lower range, allowing for prices to easily cross the SMA once again, and even crossing the upper range in one day, on January 28th, jumping from $0.007441 to $0.036265, a 387.37% increase. Prices would continue to climb at an average of $0.054439 from January 28th to March 22, when prices began to dive below the lower band from March 23rd to March 25th once again. For 3 consecutive days, prices sat below the lower band by negative 4.10%, minus 4.07%, and minus 5.78% respectively, and standard deviation has been dropping since March 14th, growing at an average rate of minus 3.86% per day. On March 29th, prices climbed above the SMA and climbed above the upper range on April 5th. From then, prices just kept climbing rapidly until their first peak on April 16th at $0.365551, a 509.8% increase. On April 17th, prices dropped 22.9%, but did not return below the upper range and began climbing once again on April 18th. On April 19th, prices hit a second peak at $0.407335, 28% above the upper range. On April 20th, prices returned below the upper range, and on April 22nd, prices fell below the SMA and lower range. Prices hit a relative minimum of $0.26081 on April 23rd, but would fail to break past the lower band on April 25th. However, from April 20th to April 27th, the standard deviation has also been dropping at an average rate of negative 16.68% per day, again making it easier for prices to jump across. On April 28th, prices climbed above the SMA and upper range, but started falling again on April 29th. However, prices did not fall under the upper range and continued to climb once again, reaching a new peak on May 1st. At this point, the price begins fluctuating in the same pattern, dropping right after a peak, but failing to break under the upper range, then beginning to climb up once again. Prices would peak on May 5th and May 7th, when they hit the year's highest price of $0.68688, a 112.3% increase from April 28th. The prices then began falling, breaking under the upper range on May 9th, and breaking past both the SMA and lower range on May 10th. Prices hit another relative minimum on May 12th. Prices would try to climb but failed to breach the upper range on May 16th, and would return to fluctuating below the SMA by May 18th. Prices rose past the upper range temporarily on the 2nd of June, but quickly fell back below the lower range and crashed to $0.179371 on June 21st, a 135.9% decrease in price. From that point forward, prices would trend downwards, with prices fluctuating below the SMA and often breaking below the lower range, Prices rarely climbed up past the upper range, only doing so notably on August 15th and October 4th. Applications. As mentioned before, the Bollinger Bands are an incredibly useful statistical indicator that can be used to analyze stock prices for short-term trading. They can easily be implemented in trading with most trading graphs, providing the option to include them in those said graphs. They can also be applied to one's charts by adding or subtracting the daily moving average by the standard deviation of the day. Variables that should be included in the analysis include price, price change, standard deviation change, the simple moving average, the upper and lower bands, and the price compared to the Bollinger Bands values. A general rule is that prices will orbit around the SMA and will try to stay within the Bollinger Bands. However, they will occasionally break through the bands if there is enough momentum. This momentum is how easily the price crosses the SMA, or the upper or lower bands. Prices will not stay outside of the range for long and will seek to rapidly return to the SMA whenever it loses the momentum. The greater the price strays from one band, the greater the opportunity for a big reversal if the price crosses the opposite band. Change in volatility can also be useful in predicting stock price changes. Periods of high volatility tend to follow periods of low volatility, and the more contracted the Bollinger Bands become, the easier it is for prices to cross over with high momentum. This increases the opportunity of a reversal, as well as prices would need to fluctuate less to cross the band. The most opportune time to buy Dogecoin would be when volatility is dropping while prices fluctuate under the lower range. However, without other indicators in place, it would be best to invest cautiously when only using the Bollinger Bands. To minimize risk, it is advised to only buy into Dogecoin when prices cross the upper range after reversing and selling when prices start diving below the upper range. If you are not using any other indicators, do not buy as soon as prices climb above the lower range or even the SMA, as prices may continue to drop further. And do not sell as soon as prices begin dropping, as they may still climb up even higher if they have not decreased below the upper range. It is still highly advised that the Bollinger Bands be applied along with other indicators, especially those that can be used to understand the long-term trend of prices for maximization of profits and minimization of risks. All the bibliography is provided down here with the charts of notable dates, the graphs, and also links and bibliography to John Bollinger's book. Thank you for watching. Thanks for watching.